There's one thing that trumps the history of the seasonals, and that's the Fed. We just put a page in the new upcoming almanac, Marty Zweig's rules, and one of the main ones is don't fight the Fed. So I'm there with Tom. He does great work, but we're looking for maybe a little bit of a pause, correction. End of the month is where we see most of that the week after triple witching, but I couldn't see much more than 5% or so, and I'm really not expecting much of a pullback. We're pretty bullish through year end. So seasonals are part of what we do, but the money's flowing pretty wide open through the spigot from the federal government and the Fed. So, seasonals pause, but there's so much behind, and the Delta variant is there, but the vaccines are also there. And until we really hear something from the Fed dictating that they're going to tighten up rates, I think that the rally goes on.
So do you just hold steady? Are you making changes to your portfolio? What are the best places to invest here on the first day of the month?
Well, it's not only the first day of the month, it's the third day before the Labor Day weekend, which
Right.
is the stronger of the days leading up to Labor Day as people begin to make a little exit for the sort of that last gasp of summer. So Wednesday's a bit better, up about 75% or so. For NASDAQ, about 2/3 of the time for the S&P and the Dow on this Wednesday before Labor Day. We're waiting for our MACD seasonal buy signal for the best 6 months. We've been a little defensive as per our historical seasonal trades. We'll be getting into most of the growth sectors, but right now we're just sort of sitting tight, waiting for the market to pause and give us a little bit of a technical signal that we're going higher. Some of the technicals and market internals right now are a little bit concerning. Breadth is not so great. New highs are not so great. So we're going to be a little bit patient here and wait for the market to tell us when the rally is ready to resume in earnest for the year-end gains.
Oil, which is, it has an effect on consumers. It has an effect on inflation. We still want to understand where this inflation story goes from here. But in Europe, a sizable move in consumer prices. It's actually what the Wall Street Journal editorial board is talking about this morning in its op-ed about how U.S. inflation prices, inflation may not be a story we're watching as closely, but in Europe, it's worth watching. How closely are you watching inflation there?
It's not something that we're watching so closely. We're looking more at the consumer sentiment here in the U.S., which is a little bit weaker. I think the U.S. still drives what goes on in the marketplace overall, not as much as it used to. But again, we're bullish. This rally looks like it's going to continue. Potential for a slight pause here in September. Europe's been lagging for many years to the U.S., and U.S. has had a big, incredible rally. It won for the record books. So, I think U.S. markets are a place to be. The big tech stocks are going to be going forward, biotech, the Qs, that sort of thing, especially once we get a good technical signal in October for the best 6 months going into next year, April, May.